This webinar was recorded on April 1st, 2020. The SBA Interim Final Rule Guidelines were released late April 2nd and include two key changes. 1. Independent contractors do not count for purposes of a borrower's PPP loan calculation or loan forgiveness. And 2. The interest rate for the PPP loan will be 1% and not 0.5%. We'll have text overlays to show the changed rules throughout the presentation. Thank you.
This webinar is put on by Generis and Associates. I'm going to go ahead and share screen with you. I'm Dave Betts. I'm the Chief Success Officer here. And I'm not an accounting or tax professional, but I help with operations and other aspects here. Pat Generis, the managing principal of the firm, will be here to walk you through some of the examples after I give you a high-level overview of what's going on. And also co-moderating today's event is Austin Shearer, our manager of digital marketing. He'll be monitoring the Q&A panel and also the chat panel. So we really appreciate all of you being here. Again, this is being recorded. And so with that, I'm going to get going here. We've got about 25 minutes worth of content, and then it's open up for your Q&A. So thanks again for carving out your time here today. What I want to do is I want to take you to our coronavirus update page, which is linked here from our homepage and also under the resources page. And so on here, we've got a number of resources about this Paycheck Protection Program for small businesses, about tax and tax relief and extensions to pay and file, individual financial questions, and then lastly about Generis and our service. Today we want to cover for small businesses two elements of the CARES Act, and that is going to be the Paycheck Protection Program and the Economic Injury Disaster Loan. So we update this page frequently, inclusive of today. And you can access a lot of these. There's links here, an overview of the full CARES Act, the stimulus package that was passed. The Tax Foundation summarized it. We have a copy of the 880-page law right here. Here's a nice little summary of the Paycheck Protection Program that we're going to go into a little bit more, and other resources by the U.S. Chamber of Commerce. And then small businesses, many of you that are here today, should definitely strongly consider applying for this Paycheck Protection Program. Now, not all of you. There will be cases where the Economic Injury Disaster Loan might be more appropriate. What we're going to do is start on the Paycheck Protection Program, because probably the 80-20 rule, this is going to be more potentially beneficial to you. So we're going to walk you through that. But after we work through some examples, we'll circle back to this Economic Injury Disaster Loan, where you can learn more here and click to apply here. So let's just get into it. I'm going to kind of use this FAQ as kind of a slide deck, like a PowerPoint here. What is the Paycheck Protection Program? It is a loan designed to give a direct incentive for small businesses to keep your workers on the payroll. So many of us have been impacted in one way or another by coronavirus, that the government is providing these loans to give you immediate access to working capital to replace lost revenue and basically help us weather the crisis until normal operations can resume. This is part of the CARES Act, and almost $350 billion in forgivable small business administration loans, as long as we're paying employees during this COVID-19 crisis. Lasts for about 8 weeks, covering cash flow using 100% federally guaranteed funds. And these are forgivable if employees are kept on the payroll for 8 weeks and the money is used for payroll, rent, mortgage interest, or utilities. It is starting this Friday, April 3rd, and runs through June 30th. So it is time limited, and time is of the essence. As we've already alluded, this program is about helping to retain workers as opposed to having them go on unemployment, which costs the federal government out of a different pocket. We all know that small businesses are a huge economic engine of America. And so keeping them in the labor force, working, productive, good for the business, good for them, helps the business get back up and operational. Covers payroll costs for full-time and part-time staff, wages, salaries, commissions, bonuses, payroll taxes, and the company portions of retirement contributions and healthcare benefits, as well as covered leave, other payroll-related expenses, including 1099 contractors, and most rent, mortgage interest, and utility expenses over the 8-week period after loan origination. One thing to be aware of is that payroll costs are capped at $100,000 per employee. So if you have employees who are on the payroll who make more than $100,000, up to $100,000 of their pay is eligible to be included in here. Okay, is your business eligible? Well, any small business with less than 500 employees, including sole proprietorships, independent contractors, self-employed people, nonprofits, that is affected by this coronavirus that was in business with employees and or payroll expenses as of 2/15/2020, yes, you qualify. Small businesses in food and hospitality, where you have more than one location, you could be eligible at each location if each location employs less than 500 workers. And starting April 3rd, as I said, for small businesses and sole proprietors, you can begin applying. Starting next Friday, April 10th, independent contractors and self-employed individuals. How much can you borrow? 2.5 times the average monthly payroll, up to $10 million, whichever is smaller. So again, payroll expenses include all those things that we talked about. And so you take what those were on average times 2.5. If you're an existing business, that loan amount is going to be based on the average payroll expenses for the year of 2019. If you're a seasonal business, you would use the average monthly payroll between 2/15 of 19 and 6/30 of 19, basically the same period that this covers for the prior year. If you're a new business and started very late in 2019, you would base it on average payroll for 1/1 of 20 through 2/29 of 20, so the first 2 months of the year. Again, remember, payroll costs over $100,000 per year per employee are excluded. What are the terms of this loan? This is an amazing situation that Congress has authorized. There is no collateral required, no personal guarantees required. Neither the government nor lenders are charging small businesses any fees to apply for these loans. The loan is made to the business. As such, it doesn't affect your personal credit report. Additionally, the typical Small Business Administration credit elsewhere requirement is waived, meaning you don't have to look for credit somewhere else. You can just go straight for this. It is a simplified and streamlined application process, doesn't require personal financial statements or other heavy paperwork burden like tax returns and financial statements for the company. The borrower must certify in good faith that the loan is necessary because of the economic uncertainty caused by COVID-19 and that the funds will be used for maintaining payroll. And you must also certify that you're not receiving similar assistance for the same purpose from another SBA program. Per the Treasury and the Small Business Administration, the loan has a maturity of 2 years at a super low interest rate of 0.5%. Loan payments are also deferred for 6 months, and there's no early payment pre-penalty. So really, really wonderful terms here. How do you get one? You will apply through any existing SBA 7A approved lender or federally insured depository institution, federally insured credit union, farm credit system institution that is participating. What you should do is contact your business bank first because you have the relationship there. And if they're not a participating lender, you can contact another approved lender. What do you need to apply? Pretty simple. You're going to complete the Paycheck Protection Loan application, which this launches in a new window. And as you'll see, it's very, very simple. Let me make it a little bit bigger for you. You're going to put a little bit about your business information in there. What's your payroll times 2.5? How many jobs? What are you going to use the funds for? List all owners of the corporation. You've got some questions to answer and things to certify, your citizenship, and then your representation and certifications. Sign. That's the application. You've got some of these things that you can reference as well. So that is linked here on our website. And in addition to that, you'll need to provide payroll documentation to an approved lender. And that is in particular important because this is a forgivable loan. So yes, the loan will be fully forgiven if the funds that you request are used for payroll cost, interest on mortgages, rent, and utilities. Now, because this is designed to keep people in the workforce, at least 75% of the forgiven amount must be used for payroll. Forgiveness is based on you maintaining or quickly rehiring employees and maintaining salary levels. Forgiveness is reduced if full-time headcount declines or if total salaries and wages decrease compared to the prior year, same period. So the 8-week period after the loan's origination date, loan is forgivable, equal to the sum of your payroll costs, excluding the compensation above $100,000, mortgage, interest, rent, and utilities, Again, the amount forgiven obviously cannot exceed the amount borrowed, and not more than 25% can be for non-payroll. They talk about proportionate reduction here if the number of employees is reduced or the total employee salary and wages is reduced by more than 25% when comparing the February 15th to June 30 period of 2020, the current year, COVID crisis, to that same period in 2019. So again, this is about keeping a similar workforce and a similar payroll. And if you're doing that and using the funds for these purposes, this is a forgivable loan. Now, if you have already laid people off, it's okay. You can still qualify for loan forgiveness if you hire employees back to pre-crisis levels by June 30th. Now, mind you, you do not have to rehire the exact same laid off employees if for some reason you wouldn't want to. These can be new and different employees. Of course, if you want to rehire your laid off employees and they want to come back, great, do that. That's wonderful. The lender, however, is going to look at just total headcount of employees and total amount of payroll. How do you qualify? You will have to ask the lender that you're working with for the forgiveness and then provide the documentation of payroll and expenditures that it was used per the purposes of the loan. And lenders have up to 60 days to issue a decision. But all indications are that the federal government is really trying to have lenders work with and be expeditious in this process, helping small businesses to just get the economy going and keep it going. Is the forgiven amount of the PPP loan taxable income? No, it is not. The canceled loan amount does not count towards gross income for tax purposes. Is there time sensitivity? You better believe it. The earlier you apply, the more likely you are to qualify and receive the requested funds. If you wait, it is possible that the $349 billion in appropriated funds could go very fast and could be exhausted based on the high expected volume of applicants. And since lenders are going to begin processing loan applications as soon as April 3rd, it's why we wanted to create this webinar right now, get ahead of it as much as we can, help you begin to forge those relationships and access those resources through your lenders so that you can get at the front of the line accessing these resources, okay? Don't wait. Does the PPP differ from the disaster loan program? So yes, the Small Business Administration has disaster loans. SBA disaster loans have more documentation. So you're going to have to, quote unquote, jump through more hoops, do more paperwork, provide some certifications. Also, those are direct loans with SBA, not through a lender. If it is a disaster loan greater than $25,000, you will require a personal guarantee and collateral. And where there's real property, they like to collateralize that. So there are lighter requirements with this PPP loan, or making it easier to get access to that. Now, that's not to say that you shouldn't pursue these. There are cases where you may want to pursue these. And in this webinar, we're going to walk you through a couple of those examples. Can you do both an economic injury disaster loan, EIDL or EIDL, and a PPP loan? Well, you could. If you previously took one of these economic injury disaster loans, you can roll that loan amount into the PPP loan. If you haven't already done one of those, if you don't have one now, you would typically apply for either the EIDL or the PPP. And for employers with payroll, in many cases, the PPP is going to be more favorable. Again, we're going to walk you through the example to see where there are cases where that isn't true, but we think for most of you here today, the PPP will be more beneficial. If you have an existing SBA loan in good standing, yes, you can still do a PPP loan. And if you own more than one business, you can also get loans for each distinct business that you have, provided it meets the qualification criteria above. Okay, my job was to provide the high-level overview. Bear in mind, this page is available to you from resources on our website. We are continuing to update it. As I said, we've updated all of these other things. What I'd like to do now is stop sharing the screen. I'm going to turn it over to Pat Generis, our managing principal. I'm going to take myself off camera and ask Pat to put himself on camera.
Do we have time for a quick Q&A first? Two quick questions asked.
I probably park those, Austin, until after we do the examples, because I think the examples may answer the questions, right?
Excellent. We'll do that.
Why don't we do that? Because I'm going to be quick. I don't want to waste anybody's time. And thank you, everybody, for coming. Thanks so much. I know it was very last minute. We threw this together this morning, but I'm very, very committed to making sure every one of our clients takes advantage of this where they can. It's the craziest giveaway I've ever seen. I've never seen this much money poured into small business. So very excited about it. And I want to make sure you guys all at least attempt to get it. So I'm going to share my screen. I looked for some examples. These are loosely based on real businesses that we work for to show you how this might work, okay? And we're going to do this for each of you if you schedule with your accounting manager so that you can see specifically. You guys can see my screen. This is a restaurant, a mid-sized restaurant. In 2019, the wages paid $335,000. They paid for some health insurance. This was their SUTA cost. They also have some sublet, knife sharpening, laundry, that kind of thing. Total for the year 2019, $348,614 in what is considered qualified wages, right? So that is how you come to your maximum loan. And anybody that's going to be eligible for this, you want to take your maximum loan, and I'll show you why in a minute. But the math there is just divide it out by 12, take it times 2.5 months of average payroll. That's maximum loan, and that's the first step to figuring out what might be in this for you. And then you go to this next tab here, and I'm figuring out what the maximum loan forgiveness might be. And what I did in these examples is I looked at April and May. That's approximately 8 weeks of expenses. I looked at what this particular restaurant actually paid out for 8 weeks after they theoretically got the loan. In this case, here's the wages that were paid. This would be 8 weeks after the loan. Here's the health insurance, SUTA. They paid out some subs. Rent is included to 20, to as long as we're 75% payroll for the grant. Rent, gas and electric, telephone and internet. This is the money that they spent in reality, and assuming all else being equal, this is where we would be. That is your potential tax-free loan forgiveness. Now, again, there's the secondary criteria, that is the grant must be 75% for payroll. And in this case, if you look at what is considered payroll for these purposes, it's $52,950. Divide that by 75%, and you get 70,600 as a maximum, because that's how much payroll they paid out. So we should pay attention to our numbers also when we get these loans to try to max out the grant. But in this case, the maximum loan amount was $72,628. And because the grant would be $70,600 tax-free, as Dave pointed out, it's unbelievable. The remaining loan balance would be $2,028, very low interest, no prepayment penalty. So I would take the maximum with the intention of, paying back whatever you don't get in a grant. And I took another example from one of our bigger clients, of course, no names, just to show you how big this is, how huge this is. So as long as you got less than 500 employees, this guy does. Wages last year, about $1.4 million, health insurance, retirement, SUTA, and his sublet. His sublet, he actually leases some employees. It counts. There's a pretty liberal definition of what is payroll for this purpose. And so in his case, he's going to be able to borrow $318,560. Now let's figure out his maximum loan forgiveness based on history. Of course, it's going to be based on the 8 weeks that follow the loan, but I'm basing it on history to see what might be in it for this guy. And so, last year at this time, April and May, this is what actually happened. Wages, health, SUTA, the leasing, here's his rent, here's his gas, here's his telephone. Potential loan forgiveness, $273,325. Now I've highlighted it because it's the lesser of, he's fine on payroll, but he just didn't pay out enough to max out his forgiveness. So in his case, he borrowed $318,560. And after the tax-free grant, he's going to owe $45,000, which he'll pay off. So should he take the loan, even if he doesn't like to borrow money? Yeah, you should take the loan. I think just about everybody should be trying to get this loan. And then of course they should be trying to maximize their grant. So, in this case, maybe if we're really watching the numbers, maybe he wants to give his employees a bonus of about $45,000 because it's not coming out of his pocket. It's a gift from Uncle Sam. Maybe we could do some things like that as well. Get some money to some of our employees who, are working real hard through this pandemic. Now, like Dave said, it's not going to be for everybody. It's going to be for, sure, 80% or more of our clients are going to want to apply for a PPP loan. For the rest of you, I look for an example of where it might not make sense. So I started looking at our really little businesses that have very low payroll. And I found one, I found several actually. This is a tiny restaurant, 2019 wages paid, $33,454. Suda, $164. Their maximum loan is only $7,004. Now, if we do your worksheet and we come to $7,004, you're probably not going to want to bother with the PPP. You're probably going to want to look at the EIDL, because the EIDL, when you apply for that, after you successfully give them an application for an EIDL loan, which you might apply for $25,000 because that's the amount that doesn't require a personal guarantee. It's a little bit easier to get a $25,000 loan. Businesses size would be just fine. They will give you 3 days after the successful application a $10,000 advance on the loan, except that $10,000 advance never has to be paid back under any circumstances. So even if you apply for the loan successfully, they deny the loan, that $10,000 advance is waived. You don't have to pay it back. And again, it's forgiveness of debt that is tax-free. So very exciting. There's something in this for just about everybody. So get with your account manager and look at your specific numbers. I just mentioned the EIDL. I know Dave just touched on it, and I'm going to give it back to Dave so he could talk about what that is. But again, if you're going for the PPP, don't bother with the EIDL right now because you're just going to slow down the PPP. Get to the PPP. That's where the money is here, where it's appropriate. All right, Dave, I'm going to hand it back to you.
Okay, thank you so much, Pat. Let me go ahead and get video camera back on and let me share screen again over here. So just to be clear at the top, we started by focusing on this Paycheck Protection Program that is going to work for many. Right up here on our COVID FAQs, it says small businesses who want to apply for the SBA Economic Injury Disaster Loan can learn more here and apply here. I've launched those tabs, and when it says learn more here, literally on the SBA website, you see, in response, small business owners in all states are eligible to apply for this, up to $10,000, economic relief that are currently experiencing a temporary loss, funds made available pretty quickly within 3 days of a successful application. This loan advance will not have to be repaid. Apply for it here. Here takes you to the application, which is also linked from our website. And what I've done is I have print screened this application, and I'm going to just walk you through what you'd have to do if it ends up that this is the way to go for you. So here is a PDF of the EIDL loan application. Pretty simple. You're going to choose what applies to you. Applicants, a business with not more than 500 employees, or an individual who operates under a sole proprietorship with or without employees, or an independent contractor. Likely going to be one of these two for most of you here. Could be one of these others, but unlikely for those of you who are here today. Then you do have to review and check all of the following. You can't be a farm. You can't be involved in illegal activity, behind on child support, having sexual live performances, gambling, lobbying, municipal government, or a member of Congress. Then you put in business information, the legal name, trade name, EIN, organization type, that's a drop down. Then are you a nonprofit or no? Are you a franchise, yes or no? Gross revenues for the 12 months prior to the date of disaster. So they're looking for the 12 months ending 1/31 of 20. So 2/1 of 19 through 1/31 of 20. If you've got your own financials, great. We, if you are in zero with us, have created a special report that we're able to provide that to you. So reach out to your account manager. So you've got the revenues, and then you've got the cost of goods sold. There are some additional questions here which may or may not apply, and they're not required. The things which are green are red until they're filled out. Those are required. These are not required, but if they apply to you, please fill them out. Provide information about the business location. Again, county is not required. Business phone, business email. You do need to know when your business was established, when you had ownership, the date since that. Business activity, this is a drop-down, and it's a unique drop-down. It's not like standard industry classification, NAICS codes. It's a little bit unique, and so just choose the best one. Once you choose that category, there will be a subcategory. You do have the option of choosing none of these, if applicable. You'll want to also then put number of employees. Then, very importantly, is your business owned by another business entity? So if a partnership or corporation owns another entity, that's a yes. Otherwise, it's a no, and it's owned by individuals, in which case you're putting all of the individual owners. So it has to total up to 100% shareholder or partner members, and you're putting in the owner's name, mobile phone, their title. In this case, Bob owns 100%. You're going to have the social security number, date of birth, location, place of birth can probably just be the state. Are they a U.S. citizen, yes or no? Residential address, and so forth. If there is more than one owner, you would click here. Otherwise, if it's just one, click next. Then disaster loan assistance. You do have to provide some certifications here. Again, not criminal, not unable to do business with the federal government, and so forth. If Generis is helping you, and we're happy to, you can put our information of who is helping you in there, and you can authorize the SBA to discuss that loan with us. Very important that you say, yes, I would like to be considered for an advance of up to $10,000, because that is what's going to give you that emergency economic relief, which will be forgiven. You don't have to pay it back if you have a successful loan application. And then where do they send the funds? Provide the bank information, account number, and routing number. You've got to read these certifications. You certify under penalty of perjury. All of this is true and correct. Click next. And it takes you to a page where you can review all of the information that you've provided. Give it a once over. You can edit it if you need to. Otherwise, you're just reviewing to make sure it is correct and accurate. All of the information we just put in, certifications, and then there's one of these CAPTCHAs where you say, I'm not a robot. You will submit it. Upon submission, you will get an application confirmation number, which we would encourage you to save in the client's file. So that takes care of the process for applying for this. This application does not equate to you getting the loan. What will happen is you would hear from an SBA member within 7 days of completing this application. And again, if you've completed one of these, but now decide you really want to go for the PPP, when that SBA comes to you, you could say, you know what, I'm going to be applying for the PPP. I withdraw my application for this. Thank you so much. I'm sorry to have wasted your time. If it's going to be better in your interest to pursue the PPP. So you're not going to want to have both of these things going in play. You're going to want to choose the better based on that work that you're doing with your account manager with us on those worksheets that Pat demonstrated. So that is what I wanted to demonstrate here. And with that, I'm going to stop sharing, and I'm going to invite Pat to come back on screen, and this would be the time for the Q&A.
Excellent. Thank you, everybody, for your questions. The way that Q&A is going to work is I'm going to bring you in for a quick second to ask your question live, if you'd like. If you're having audio troubles, we'll give it a shot, and after a while, I'll ask the question myself. So our first question comes from Mike Hyman. And Mike, are you there?
I'm guessing he's having an audio issue.
He might be. Give him a couple more seconds.
Hey, Mike, I'm glad you made it.
All right. So Mike asks, is it $100,000 salary or $100,000 total expenses?
Well, there's a lot of moving parts here. So first, if we're talking about maximum loan amount, yeah, it's going to be the pay, the wages, plus SUTA, plus health insurance, plus retirement. It's not all expenses. It is wages. So on that maximum loan computation, they're just going to be looking at, labor costs. I think that answers the question.
Let me piggyback on here. I think Mike wants to know the amount over $100,000 that is exempted from someone's salary. Is that just the wages, or is it total payroll costs for that person?
No, it's just the wages. So if you're talking about I do not believe that the health insurance factors into that. I do not believe that retirement contributions factor into that. I will research that and make sure that I'm right. But I think that they're just talking about wages. If your salary is over $100,000, say 120, only 100 counts. I don't think that they're factoring benefits into that. But I'll confirm that for you, Mike, and send you an email.
Excellent. Our next question comes from Haroon Salimi. Hopefully I pronounced that properly. Haroon, are you there?
His mic is actually muted, Austin. So I don't know if you could unmute it for him, but I could see that he's muted.
Yeah.
Can you hear me?
Yep, we can hear you.
All right. So you have a scenario question. If I borrow $100,000, say that's the maximum that I can get, that's what I get, and I use 40,000 of it for payroll costs over the 8 weeks, which is 50% of my pre-virus payroll. Okay. And then I use $40,000 for rent over those 8 weeks. What amount is forgiven of the $100,000?
Okay, so you're probably going to have a proration issue there, because now you get the compliance part of it. So there, again, a lot of moving parts. You've paid out money that would be forgivable, but you haven't made the compliance part of it, of keeping your employees intact, right? And I think they're looking for 75%. So I would assume if 75% is the number that they're looking for, and they haven't put out regs on this, I am guessing, full disclosure, I am guessing, but I would guess in that case, you would get 2/3 of the maximum potential grant in that case, because they wanted to see 75, you did 50, 50 divided by 75 is 2/3. So I would guess that the way that they're going to prorate your grant is they're going to give you approximately 2/3 of the maximum allowable grant when you do that computation. So maximum loan forgiveness.
Can you still hear me?
Yeah, I can still hear you. Yep.
So if I don't have the demand for 75%, then I just bump up the pay for the 50% of employees that I still have. And this is for a restaurant.
Okay. Yep. Sure. I get it. And you can, you don't have to, but you can, maybe you hire some people to do other things, consultants or whatever, marketing people, or, so it isn't like, all right, you had Susie, now you got to have Susie, and you had Jack, and now you got to have Jack, so wages are wages. They just want to see you employing people, right? Full-time equivalents are full-time equivalents. It's not specific to the person, and it's not specific to the duty. There's nothing like that. So there's, I think, a strong incentive to put people to work. And if you don't, you're just not going to get the grant. That's it. So the worst case, people have asked me this question, well, what if it doesn't get forgiven? So what? You got a very cheap loan with very favorable terms, very easy. That's the worst case scenario. So my advice is get the loan and then work to maximize the grant in a way that's logical. I don't want anyone to set money on fire just to get a grant. You're setting the government's money on fire, not your own, but you're still setting money on fire. It's not
that's my goal, of course, is to maximize the grant. But say that this is the scenario I do go with, where I use 40,000 for payroll, 40,000 for rent, and I essentially have $20,000 remaining, just kind of sitting in cash. So in this scenario, what percentage of the 100,000 is forgiven?
So again, presuming, so first of all, I think our max forgiveness in that case would be about $53,333.
Yeah, I mean, if 75% is supposed to be for payroll, then 25% can be for non-payroll, and 25% of 100,000 is up to $25,000, right? If you take $100,000. So on that end, you got 40,000 in payroll, which is totally forgivable, and and so then is that. So
these are about $53,333 in a maximum. We're guessing here. There's no regs on this.
Okay.
But what I would guess, and it's a pretty good guess because this is like tax law, I would assume that they would first calculate your maximum forgiveness at $53,333. And then they would take that times 67% because you didn't keep your people employed. And I would expect that your forgiveness would be something like $35,733. I don't know that for sure, but if I had to guess, and I'm willing to guess, I would guess that your grant there would be $35,733.33.
And Haroon, you'll do this worksheet with your
Sure.
account manager, and you guys will discuss and decide, and make the best decision. And we're involved to help you.
I have
with
no
it.
doubt about that with Kelly.
Take the maximum. I would take the maximum. I already know that part of it. So really, we got to look at this in baby steps. I do feel some pressure to get these things done and to get in front of the bank. And I wouldn't hesitate to take the max. The worst thing that happens is you don't get a grant and you have a cheap loan. And that's okay too.
Right, because my main concern has just been how do you optimize the forgiveness? Because they do lay out a few different scenarios as far as doing an equivalency to pre-COVID-19 payroll. And then there's another one that has to do with the reduction in pay. But then I've also seen the other where if you restore employees by June 30th, 100% is forgiven. But that scenario doesn't make sense to me personally because this only covers 2 months and it would not cover June, which is the third month.
And besides that, it's based on the 8 weeks after you originate the loan, the expenses that you actually incur.
Right.
I could see where they would waive the requirement, but still you didn't spend money on payroll, right? You're still going to be capped by the money that you actually spent. So we could run through scenarios until we get the regs. We really won't know. It's the compliance piece is still a little bit of a mystery to me. I don't know what it looks like, but I expect that we'll get regs soon on how that's going to work.
Well, thank you.
Thanks, Haroon.
Thank you for your question, Haroon. Our next question comes from Donovan Wilkins, who asked me to read this for him. So on the PPP loan, I'm seeing that independent contractors are included. So is that very variable, or do I just take the last 8 weeks?
I think it's based on the average of 12 months. So you're going to have to look at last year and you're going to have to give your bank 1099s.
Yep.
That's how this is basically going to work. It's a very short form. We actually have a specimen application for this thing on our website. I don't know, Dave, did you pull that up when you were talking?
I did. I'll go ahead and share screen again real quick.
So you're going to fill out this very short application with your bank, and they're also going to want payroll records, which is going to include your 1099s. And if you don't have 1099s, if it's something like labor leasing or something like that, you're going to have to prove it up, but it's historical stuff that you're going to have to prove up in figuring out your maximum loan. And so if you were 1099ing these people, I imagine they're going to want to look at last year's 1099s. They're going to divide that by 12 and take it times 2.5 to come to your maximum loan. And basically what you're going to tell the bank is, give me the max. You figure it out and you give me the max. And so when you're applying, if you have 1099s, send them, put them in your application. Get as much as you can.
For the independent agents that were there with you last year, whatever that average, that they were paid in 2019, total all of that, divide it by 12 times 2.5, that plus any salaries that were paid in wages. Does it, hopefully that.
Excellent. He had one more question. He's using PPP on one business and the EIDL on another business. Does that create a problem?
None that I'm aware of. I mean, it's a business loan, so it's per business. You can't have both loans, but I assume these are corporations or LLCs where they actually are entities. I suppose if you're a sole proprietor, that could create an issue because it's you. There is no legal entity other than you. I don't know of any regulation against it. And I would actually probably recommend it in some cases. So maybe you've got a little sole proprietorship in one instance or a single member LLC that isn't doing much, but you go for the EIDL in that, and then go for the PPP on the bigger business.
That's right.
Would be my recommendation.
That's probably the situation here.
But I would also recommend that you not do anything that could screw up the PPP, because as you can see, it's very big money. So if there's any risk in it, if we can find any risk, I would just walk right away from that 10 grand in most cases where it's big money.
Again, if separate EINs, you probably ought to be in the clear.
Right. If they're real separate entities from you, if it's you that owns both as a sole proprietor, I would be a little bit concerned about that because you're the one getting the loan. But if they're really LLCs or corporations, I don't see any.
Member partners. Yep.
Yep.
Okay.
Excellent. This next one is from Tiffany Nash. Tiffany,
Hey, Tiffany.
able
Glad
to
you're
talk?
here. Her mic is muted if you want to unmute it.
Oh, there. Can you hear me?
Yep. Hey, how you doing,
Okay.
Tiffany?
Thank you.
Okay, good. So we're a business that isn't immediately affected by this because we're an architecture firm, but it's possible that some of our projects will stop, and which will therefore create a burden, not in this immediate month or two, but down the road. Are you suggesting?
Yes, I am absolutely, you must apply. Yes.
Okay.
That's why I know, Tiffany, yes, you must apply. You can't tell me that there is an uncertainty around your business that you weren't affected by COVID. You were. Everybody was, whether they know it or not. I don't think you're being disingenuous, dishonest, or fraudulent when you say that there's a lot of uncertainty in my business because of COVID. And so I could use some working capital to get through the year. I know you've got a lot of staff that you're going to want to keep paying. I would apply for the loan. The worst thing that happens is they say no. And I honestly think they're not going to say no to a lot of people. They've told the banks, and that's why I feel this desperation. They've told the banks, here's $350 billion. We're going to pay you to give it away, right? And so I want to make sure our clients get it. And the way that you are going to get it is by applying for it. So apply for it.
And it's still forgivable. Do they do anything to see if you actually needed it?
Yeah.
No, they don't do anything to see if you needed it. They make sure that you kept your people working.
Okay.
That's right.
Okay.
That's the
Keeping
compliance
employees on the payroll. It's like, this is an uncertain time. We don't want people to go on unemployment. We want you small businesses to keep employees in the workforce. If you do that, you can borrow this money because you've been affected. You're keeping your employees in the workforce. If your employment levels and salaries are similar in 2020 to what they were in 2019, then the money that we've given you during that 8-week period is forgivable.
Okay.
Yep, you're exactly the reason that we did this, Tiffany, because I'm so afraid that our clients are going to hear about this and think, you know what? I don't want to borrow any money. I don't need it. I can make do without it, right? And they're going to forego this huge opportunity. Look at the numbers that I flashed. I got a client I know is going to get $300,000 out of this, tax-free. Beautiful.
Okay. Thank you.
Yep.
Thank you for your question, Tiffany. Our next question is from Tim Perchinsky, who simply asks, do we have any recommendations for an SBA banker?
I'm going to use my bank where I bank, my commercial bank, because I have a relationship there. That's what I would recommend. I think
Start with your business bank. The people you're already banking with, start there, see if they're going to do these PPP loans. If they aren't, look elsewhere, and there's many choices, and you can reach out to us if your bank isn't, and we can maybe give you some recommendations, Tim.
Excellent. Our next question comes from Anik Shah. Anik, you should be able to talk now.
Hey guys.
Hey, Nick.
Hey, it's nice to meet you guys. Pat, Dave, Austin. Hello. So, I mean, from my understanding, the maximum benefit is for folks, businesses who essentially have a high payroll cost, correct?
That's
Okay.
right.
So if you had an LLC, which basically just was a pass through that charged management fees, and then within that LLC, it pays you like $30,000, one person with a bunch of expenses, that particular LLC wouldn't be the best company for this program.
I think in that case, let's crunch the numbers. I don't know if you've got 1099 people or whatever, but it sure sounds like in that case, you're going to want to go for an EIDL loan. So again, I would still apply for the other one, the smaller one, because that does have a $10,000 grant.
Okay.
And I think they're going to be pretty liberal with that. So there's something here for everybody. But if you've got payroll, there's quite a bit of something here for you.
Okay. And then I have another company where payroll is like $300,000 a month. So that company would get.
Beautiful.
PPP.
Yes, absolutely perfect.
Yeah, PPP.
Yes.
And so get with your account manager, Anik,
Okay.
and we've got this template that you saw Pat demonstrate, and they know how to use it, and they've started using it, and they'll do it with you customized so that your direct questions based on your situation and your actual financials are going to come through, to help.
Yeah, the maximum loan is $10 million. So if you're at $300,000 a month, That's $800,000. It's beautiful. I'm
Yeah.
very happy for you.
Well, that business basically consults with schools. So those employees, we put them on unemployment. So do we have to bring them back off of that immediately or wait for this loan?
Well, I would probably recommend waiting for the loan because they're
Right.
going to do the testing period after you get the loan. Besides, you know, and again, there's this line where if you really just don't have anything to do, I don't know, I'd have to walk through the situation because it's not like you're going to profit from it if it's just all going out in payroll.
Correct.
Although you are going to keep your people that way. They're not going to go off and get another job because you
Exactly.
laid them off. That can be an upside. But yes, you are going to have to bring the employees back at some point in time, and that's how they're going to do the math.
But again, what will they do if the schools are closed? What are your people doing? You got to think through the real life scenario and what you're compensating and all the rest. You know, you don't want to just chase the money because it's out there. If it is a net wash, and you know,
Right, exactly. And you don't want to hurt your employees either because they've got some pretty nice new unemployment benefit programs
Exactly.
going on.
Mhm.
And that's one of the things I'm concerned with. I think if I'm getting 100% of my wage on unemployment for the next 4 months and you want me to come back to work, I'm not that motivated to come back to work. Right. So now do I have to bribe you to come back to work because you get the same money for staying home? I mean, those of us that love our jobs, we do it for nothing, right? There's some of us, but most people aren't like that. They want a financial incentive, and there isn't one. If you're getting 100% of what you earned in unemployment, you're really not that interested in working.
Okay. And then a final question, the business that you guys help us with, our customers essentially lease offices from us, right? And, I'm pretty sure they're going to stop paying us starting today. Obviously our payroll isn't that super high, maybe 20 a month or so, but our revenues will kind of almost evaporate. So PPP, while it would help a little in the payroll department, what about the loss of revenue?
Won't do anything for the loss of revenue. Obviously, I mean, there are other loan programs, but specifically I would be looking at the PPP.
Okay.
Maybe after you do the PPP, you could look at another loan if that's the way you want to go with it. You may want to just self-finance. I don't know. We'll have to look at the specific situation.
get with Dina and crunch it.
Yeah.
Talk it through.
Okay. All right, guys. I appreciate it. Thank you.
Thanks for your question, Anik. Our next question is from Linda, who's asking for another client not able to be here. Is there any relief for landlords who have tenants that are out of work?
For landlords who have tenants who are out of work. I mean, a landlord, I guess if you're at the level of maybe a real estate professional, possibly, this is something I'm going to want to look into. But landlords don't have payroll. So generally they don't have payroll. They may have some 1099s. So it would really depend on the situation if we even have an issue here. If you're a landlord that has 500 properties and you've got 6 people on your payroll to manage those properties and maintain those properties, you might be able to get a PPP loan. But if you're a landlord, like I own a couple of houses and maybe I send out a plumber once in a while, the PPP just isn't going to work out for you. And I'm not sure if you could do an EIDL.
Yeah, I mean, the economic injury here that you're talking about is I've got tenants who are out of work and now they're not going to be able to pay, and we can't evict them because the law is saying we have to protect their housing during this crisis, but yet I don't have money to pay my mortgages because the rent isn't coming in. Is that economic injury? And we would probably have to research that a little bit further, but it could be that that's the play, certainly far more than the PPP side. If you're talking about a single landlord with rents that aren't going to be able to be paid in the timeliness or fullness because people are out of work.
Right. It's different than what we're talking about here. Certainly the PPP wouldn't apply to most landlords.
Mm-hmm. Hopefully that's a little bit of help, Linda.
Yeah, thanks for your question, Linda. Our next question is from Greg Lopsiger, who should be able to talk now. Greg, unmute yourself when you're ready.
Yep, I'm here. Hi, Pat.
Hey, Greg, glad you made it.
Yep. Hey, appreciate all you guys taking your time to do this today. This is very helpful. We're needing some direction, and really, I just want to thank you for taking your time to do it. Yeah, just curious as far as the loan. Say I get, like my example, we got 85,000, and do I have to use it within an eight week period, or can I just use my other money for part of the time? You may ask why would I do that, but I'm just curious.
Well, yeah, you have to now. I don't even know how you would separate the two, to be honest with you. You're going to probably put this money into your operating account, and you're going to continue paying payroll, and you're going to continue paying rent, and you're going to continue paying utilities. And so I think the question is going to be, did you pay what did you pay in payroll? They're not going to say, they're not going to somehow magically figure out which dollar you used for the payroll, but did you pay the payroll? Did you pay the rent? And so you could park that money in your operating account, and how did they know which dollar was spent for, which.
So do you think that Pat, or Dave, that as far as having a separate checking account really wouldn't be necessary then?
I wouldn't think so. You're getting money coming in as a loan. You're using it for active cash flow, operating expenses in real time. You're going to take 85. You want to spend 75% of that, at least on payroll. So 61.5, 62,000 on payroll. If you're going to spend that over the coming 8 weeks, and you've got another 20 some and change on rent and utilities and mortgage interest, you're golden. You just got to prove that was how the money was spent on the back end with the lender.
But again, just make sure it has to be done in that 8 weeks, or it does not.
It's the 8 weeks that is going to matter. My understanding is from the origination, 8 weeks out, they're going to look at the money that you spent. And Greg, schedule 15, 30-minute Zoom with me, and we'll go over your specific case.
Okay.
I don't think it's going to be a problem to get to near the maximum loan forgiveness unless you really shut down during that 8 weeks.
Okay.
They're going to look at what you spend over that 8 weeks. Again, we're waiting for regs, but I think they're probably going to ask for payroll tax returns, maybe payroll journals, 1099 vendor reports, that kind of thing. Certainly checks paid for rent, your lease, those kinds of things. And they're going to want to just confirm what you spent, not how you spent it or where the money came from.
Okay. Yep. Okay. Sounds great. Thank you.
Yep. Thank you, Greg. I almost removed him from the entire thing. All right. Our next question comes from Megan Reed, Megan, you're with us right now. You just have to unmute.
All right.
Megan, I am so happy to see you on this presentation. My God, you got a computer and everything. Welcome, Megan.
Well, thank you, Pat. Thank you.
How can we help?
Pat, do you think I should apply for the EIDL? And if I do, when they ask for gross income, is that before expenses or after expenses?
It's going to be gross before expenses. So again, I don't want to talk about anybody's, we're in front of a lot of people here, so don't talk about any of your own personal
right
here. But yes, I think I would apply because the worst thing that could happen is they say no. But if you apply and you get yourself a $10,000 grant that does not have to be paid back under any circumstances, understand the intent here. The intent is the government would like to just push a ton of money onto small businesses.
Mm-hmm.
Apply. The worst thing that could happen is they say no, or you don't get the $10,000 grant. You don't have it now. So yes, I would apply for something.
Okay.
And let us help you on your personal situation. We'll look at it. But I do know your situation, and that is going to be the place to go for you.
Okay. Thank you.
As Pat has said, if you apply for the loan and you get the loan, it is a super low interest rate. And if none of it is forgivable and you have some left and you haven't used it, you can pay it off, right? I mean, you're going to use it for forgivable purposes, but there's such little downside and so much potential upside that's why the urgency was here with all of you here today.
That's exactly right. That's exactly right. Yeah.
Okay, fantastic. Thank you so much, Pat.
You're welcome.
Thanks, Meg.
Thanks, Meg.
Thank you.
All right. Thank you, Megan. Our next question comes from Tom Engblom, who asked me to read this for him. Can this apply to associations, specifically 501c3s with a staff?
Yeah.
Nonprofits are eligible.
Right. And welcome, Tom. I'm glad you're here. I'm so happy you made it.
Yep, nonprofits are eligible.
Yes. Our next question comes from Carrie Erb, who asks, might the loan be not forgivable if it turns out the business was not adversely affected financially? Some of this is unknown at this time, and it will take time.
Yeah, I have seen nothing, Dave. Anything that
You're doing the good faith certification that due to the uncertainty of COVID, my business is affected. So for example, Carrie, I know where you're coming from. Financial markets have hit, and you are in an organization where there are financial advisors that is to create reduced portfolios and reduced economic value to the organization. So you have been affected. Revenue to the organization has been affected. And on the insurance and property casualty side, you've got producers, individuals, small businesses who may be going out of businesses, premiums may be going away. And so though you may not be seeing an economic impact right now, are you affected? Is there potential to be affected? Yes. And again, in light of that, we're not trying to hurry up and lay people off. We're trying to keep them employed here, and we're paying people. So I think it's unlikely that they're going to go back and verify somehow that you weren't adversely affected. I mean, COVID is so widespreadly affecting people in even unanticipated ways yet for a period of time to come. So that's what I would say. Pat, anything to add there?
No, I agree. And I have a wealth management practice, and we're looking at it for that as well. Same reason, except it's a question of payroll. So, yeah.
Excellent. Thank you for the question, Carrie. Our last question goes to Natalie Fofana. If you have any other questions, do we want to do a cutoff here?
Yeah, that's going to be the last question. Get your question in now. Otherwise, forever hold your peace.
Yeah, we're doing it again at 2:30. If you think of something, join us at 2:30.
Right.
Yeah. So Natalie, just unmute your mic and you're able to ask.
Hi, everyone.
Hi.
Hi. Natalie, we can barely hear you.
Yeah, there's a audio issue here. Maybe you read.
Okay, what about now?
Better.
Much better.
Perfect. Yeah.
Okay, I took out my headset. Okay, so I am a real estate broker, and I have a real estate business. So I guess just trying to see, in my case, just looking at the two, the economic disaster one or the paycheck one, forget the names exactly offhand, but just kind of want to see which ones would possibly be better, you think, to do in my situation, being a broker. And then the two, just, I know y'all were talking about the calculation of, like, let's say if you're 1099, and I caught the tail end part of that, just trying to see like how I would do my calculation on the payroll if my payroll was that particular amount, for an example.
Pat, why don't you share screen again? Because Natalie, you've got two things. You've got your income as an agent through the brokerage or as the broker owning it, but you also have, as a brokerage, commissions that were paid 1099 to your agents, right?
Correct.
Okay. So
the computation of the maximum loan amount is about what you pay, not what comes in. So what you pay out. And so if you can give me a rough idea on these numbers for the year for 2019, I don't know if you have a copy of your financial statement or tax return. That's what I would have out for this. I don't know if you have wages that you pay for, like a receptionist or something like that, but that would be the money that, is on payroll. You're withholding taxes. There's 941s and W-2s. Do you have any numbers? Do you have anything like that?
There, I think in her case, it's all 1099.
Okay.
Agents in a brokerage.
That's fine. How much were the 1099s that you paid out in 2019? You know the total of that, or approximate? I mean, you have to bounce a number off of me for me to know, which is.
Let's say 80,000 in let's say 70,000 in commissions. I'm not including myself.
Not including yourself, assuming
other
you're
agent.
proprietor. Yeah.
So let's say 70,000.
70,000 paid out.
And an additional 90,000 that was paid out to you as through the business too, right?
Right, yeah, because I'm considered an agent of the business. I mean, I take my own portion of my commission.
Sure. Is this a separate entity? Is this a corporation or an LLC?
LLC.
Oh yeah. All right. Let's put your 90 back in.
So 90 plus the 70.
60,000.
Mm-hmm.
Yeah, I would be looking at a PPP loan. I would be interested in a PPP loan. I would try to get that based on my 1099s, because you could see the maximum loan by the computation is like $33,333. The EIDL caps out at 10 grand. And it's not like you could get that on top of this. So even if you got that, it would reduce your maximum forgiveness under here. And so let's say you're paying $160,000 out. I'll go all the way through this example.
Babe, can you
2.5.
hello?
Hi. Can you hear?
Okay, yeah, I can hear you. I'm sorry.
Good, good. And so then we pay out 33,333.
So that's the question. In the 2 months that'll follow the loan, and you're going into maybe a realty time when April, May is kind of an uptick. So then what will have been the actual 1099, income paid to agents for, listing and selling some homes. So
For 8 weeks.
that's right.
Yeah, for those 8 weeks. So maybe
Okay.
it's only 17 grand. I mean, so these are hypotheticals, but what's your rent?
1,200.
A month.
And that's only rent for the business, right?
That's right.
Okay.
And how about your utilities at the business?
About 300.
300. So we're looking at 600. And telephone and internet?
About 80 a month.
80 a month, so 160. So here you go. You'd be looking at a remaining loan if you borrow. Now, again, this is hypothetical. We're guessing, we're throwing a lot of numbers around, but assuming that you paid out half of your average commissions for last year, 17 grand. Rent was the same, 2,400, utility 6, telephone and internet 160. I come to a forgiveness based on the top criteria of $20,160, which means you have a little loan left. And the thing that I keep stressing is try, and the worst thing that happens is you have a low interest loan that you don't have to make a payment on for 6 months that has very favorable terms. I think given your situation, if it were me, I would try for the PPP loan.
Okay, which is going to open up, I guess, open April 3rd.
Going to open what?
They're going to open the applications for those April 3rd.
On Friday, right. So what you would want to do is contact your lender, your banker that you do business with, and say, hey, are you all doing these Paycheck Protection Program loans? And find that out and say, I want to get in line. Let me get the application. And if they're not, have them recommend someone who is, or, a lot of the big banks are doing it, as well.
Take that specimen application off of our website and prepare yourself. Be ready so that the bell rings on 9 a.m. on Friday morning, we could all be rushing the bank.
All right.
All right, good.
You guys, we're real grateful you're here. I think that takes care of all the questions that you got. We are accounting, tax, and financial services. We love helping small businesses and entrepreneurs succeed. This has been a devastating time for so many where you have to close because of an order by the government. And you have to make these tough decisions, and you're wondering how to survive and how you're going to survive and what the cash flow is going to be like. And thank goodness the government has put this into place to help keep things afloat. Again, reach out to us however we can help. If you're an existing client, you already know who to contact with your account manager. If you're in the process of becoming a client or want to get in touch with me, we're happy to have you. Visit our website, stay in touch on that coronavirus page. That's all I've got.